Okay, so um, tonight we're diving into something that's been on my mind a lot lately, credit card debt.
Mm.
Imagine just opening your mailbox and it's like overflowing with credit card bills. Each one's like flashing minimum payment due. Like, seriously, just thinking about that kind of makes me sweat a little.
Yeah, it's definitely a stressful thought for sure. And what's even more like concerning is that this isn't just some like personal finance issue, right? The trends we're seeing in credit card debt, like it could actually be a warning sign for the entire US economy.
Yeah, it's kind of scary. And that's exactly what we're going to unpack today. Like, we're going to look at why this is so alarming, what's causing it, and what it could mean for all of us, right?
And we'll also kind of explore like how this is affecting different groups of people because it's not hitting everyone equally.
Right, exactly. So to get us started, can you maybe explain what economists even mean when they use this term revolving credit card balances?
Sure. So revolving credit card balances are basically the unpaid portion of your credit card bill that you carry over from month to month. It's that debt that just keeps growing if you're only making those minimum payments.
Got it. And why is this such an important thing to even track?
Well, it's a really key indicator of how reliant people are on credit. And that in itself can tell us a lot about the overall health of the economy. The more people rely on credit to get by, the more vulnerable they are. And that can spell trouble.
Trouble for everybody, yeah. Okay, so what's the latest data telling us about these revolving balances?
The numbers are pretty startling, honestly. The Federal Reserve Bank of Philadelphia, they keep track of this stuff, reported that revolving credit card balances hit a whopping $645 billion in the third quarter of 2024.
Whoa, okay, that's a lot of debt. Like, how does that even compare to previous years?
Well, it's a massive jump, like a 52.5% increase from just mid 2021. And this is kind of where we get to that first big takeaway we were talking about. More and more people are falling into the minimum payment trap.
Okay, the minimum payment trap. Can you explain that a little more?
Absolutely. What we're seeing is a growing number of people are just paying that minimum amount due on their credit cards each month instead of paying down a larger chunk of the balance. You know,
Right, okay. And what's the problem with that? I mean, as long as you're making the minimum payment, you're in the clear, right?
well, not really. And this is where it gets really interesting. So let's say you have an average credit card balance, right? Like $6,380, which is pretty common these days. If you're only making that minimum payment at the average interest rate of 20.27%, it would take you like 218 months to pay off that debt.
Wait, 218 months. That's over 18 years. Just to pay off like a little over $6,000.
Exactly. And here's the kicker. During those 18 years, you'd end up paying over $9,344 in interest alone. That's more than the original balance itself.
So the minimum payment trap is very real. You might feel like you're keeping up, but you're actually just digging yourself deeper into debt.
Yeah, precisely. And this is what brings us to that second key takeaway. This whole trend of making only minimum payments, it's been steadily increasing for like the past 3 years. It actually hit a 12-year high in the third quarter of 2024. Over 10% of active credit card accounts are now just treading water with minimum payments.
Wow. So it's not just a few people here and there, it's a big chunk of credit card users. This really sounds like a recipe for disaster. What's even driving this surge in credit card debt?
So there are a few key factors at play here. First, we've got inflation, right? The cost of like everything, gas, groceries, rent, utilities has been just going through the roof. It leaves people with less money at the end of each month after they cover their needs.
And when money gets tight, people turn to credit cards to fill the gap.
Exactly. Then, just to make things worse, we have rising interest rates, right? The Federal Reserve has been bumping up interest rates to try to fight inflation, but it has the side effect. It makes borrowing money, especially on credit cards, way more expensive.
Yeah, so it's like a double whammy.
Yeah.
You have less money, and the cost of carrying that credit card balance just keeps climbing.
Right. And then there's one more factor that's kind of adding to this problem. The pandemic. Remember those early days? Economy was uncertain and that government stimulus money was flowing. Well, banks actually relaxed their lending standards for credit cards.
Oh, so they were just like handing out credit cards more easily.
Yeah, basically. Even to people who wouldn't have qualified before, delinquency rates were low because of the stimulus money, so banks felt okay taking on more risk.
But now that stimulus money's gone and inflation's hitting hard.
Exactly. And this is why we're seeing the fallout now. A lot of those borrowers who got cards during the pandemic are struggling to keep up with those payments as inflation and interest rates rise.
So it's like a perfect storm for a credit card debt crisis, huh? But before we get all doom and gloom, let's talk about our third takeaway. You mentioned earlier that this trend isn't hitting everyone the same. Can you, break that down a little?
Of course. So, you know, those overall economic reports might make things look kind of rosy, but the reality is that this burden of credit card debt isn't being shared equally.
Meaning some groups are getting squeezed harder than others.
Yeah. And that's what we'll get into next. Yeah, it's a little like looking at one of those, fancy cakes where the icing is all smooth, but like underneath there are cracks and the layers are all uneven.
Yeah, I get that, like a cake wreck in disguise. Okay, so we're seeing those cracks starting to show with credit card debt. Who's really feeling the squeeze here?
So lower income households are definitely bearing the brunt of it. They've been hit the hardest by inflation and they're more likely to have already drained their savings. They're basically relying on credit cards just to, cover their basic expenses.
Man, that's got to be so stressful. There's got to be some data backing this up.
Yeah. Oh, yeah, for sure. The Federal Reserve Bank of New York, they found that in the last quarter of 2024, only 37% of households earning under $50,000 a year were able to make a major purchase, like a car or a big appliance. That's like the lowest percentage they've ever recorded.
Wow. So, some households might be doing okay, but others are barely scraping by.
Exactly. And this is where we get into the potential implications for the entire banking system. What happens if more and more people start falling behind on their credit card payments? It could have a domino effect.
Okay, a domino effect. Like how?
So banks set aside money to cover potential losses from things like, unpaid credit card debt. But what happens if those losses are way bigger than they thought?
And that can't be good.
No, it could lead to banks making it harder for people to get credit, tightening those lending standards. That could really slow down the economy, maybe even trigger a recession.
So this whole credit card debt thing, it could spiral out of control. Are there any signs that, that this is already starting to happen?
Well, there's this thing called the DFAST stress test. It's basically like a simulation to see how banks would handle a really bad economy.
DFAST, what does that even stand for?
It stands for the Dodd-Frank Act stress test. It's named after that Dodd-Frank Wall Street Reform and Consumer Protection Act. They passed it after that whole 2008 crisis to try and, stabilize the financial system. Anyways, the DFAST tests this year, they showed that banks could be looking at $175 billion in losses just from credit card debt.
$175 billion. Okay, yeah, that's a huge red flag. Are we, headed for another financial crisis like back in 2008? Is that what you're saying?
Well, it's too early to say for sure, but it's definitely something we need to keep an eye on. I mean, there are some similarities, right? Back in 2008, it was those easy mortgages that got us in trouble. Now it's easy credit cards.
It's like we didn't learn our lesson.
Well, the hope is that we did. There are things we can do, both individually and as a society to avoid another crisis.
Yeah, I'd love to hear more about that. But before we get into solutions, I want to go back to something you said earlier. This isn't just about numbers, right? It's about people's lives.
Exactly. Behind every single one of those credit card balances, there's a person, a family, just trying to make ends meet. For a lot of them, it's a constant struggle.
It's easy to forget that when we're talking about, billions of dollars and all that economic jargon. These are real people struggling to afford, groceries, rent, just the basics.
Right, and that's why it's so important to, talk about it, to raise awareness and offer help. It's not just about preventing some big financial meltdown. It's about helping people live better lives.
I totally agree. Okay, so let's shift gears a bit. What can people do to get their own finances, under control? How do you avoid falling into that minimum payment trap?
Okay, so one of the most important things is to make a budget. I know it sounds kind of basic, but you'd be surprised how many people don't track their income and spending.
You got to know where your money's going before you can change anything.
Exactly. A budget helps you see how much you're spending on, things like food, entertainment, getting around. It also helps you figure out where you can cut back.
So what if someone realizes they're, spending more than they earn? What can they do to get back on track?
So there are two ways to approach that. You can try to earn more money, cut back on spending, or, ideally do both. Let's start with the earning more part. Have you thought about asking for a raise?
I have, actually, but I'm kind of nervous to ask.
Yeah, I get it. It's not an easy conversation. But, if you've been doing good work and you're valuable to your company, it's definitely worth talking to your boss. You never know what might happen.
True. What about some other ways to, bring in more money?
Well, you could always look for a side hustle or a part-time gig. There are tons of ways to make extra cash these days. Freelance writing, online tutoring, driving for a ride-sharing app, or even, delivering food.
Yeah, the gig economy's definitely opened up a lot of doors.
It has. And the best part is, a lot of those side gigs are pretty flexible, right? You can work around your schedule and choose stuff that interests you.
Okay, so that's for earning more. What about the spending less side of things? Any advice there?
Here's where that budget we talked about comes in handy again. When you track what you're spending, you can see where you might be able to cut back. And it doesn't have to be anything drastic, you know?
Like ditch that daily latte that's costing you $100 a month.
Exactly. Or that gym membership you never use. Or all those streaming subscriptions you forgot you even had.
Yeah, it's crazy how those small things can add up.
For real. Even small changes make a big difference over time. It's all about, like, paying attention to your spending and making conscious choices.
Okay, so let's say someone's really struggling. They're barely making ends meet and they've got a ton of credit card debt. What can they do to start turning things around?
Well, the first thing is, if they're only making minimum payments on their cards, they need to figure out how to pay more than that. Even a little extra can go a long way.
But what if they're already stretched thin? I mean, where are they going to get the extra money?
That's a great question, and that's exactly what we're going to get into right after we come back.
All right, so we're back, and we were talking about how important it is to pay more than just the minimum on those credit card bills. But I know a lot of people are probably out there thinking, that's easier said than done. Where am I supposed to find that extra money?
Yeah, it's a good question. There's not like, one magic solution. But a few things might help. Remember those expenses we talked about? Even small tweaks can free up some cash. Like, are you paying for any streaming services that you don't really even use anymore? Or could you, pack a lunch a couple times a week instead of eating out?
Yeah, sometimes it's the little things that really sneak up on you.
Oh, absolutely. And then there are some bigger steps you could look into, like refinancing your mortgage or that car loan. Interest rates might be lower now than when you first got the loan, and that could save you money each month.
Right. It's easy to just forget about those monthly payments once they're set up.
Totally. And actually, speaking of setting things up automatically, you could try automating your savings. Even if it's just a little bit each month, having that money automatically go into a savings account really adds up.
It's like paying yourself first.
Exactly. And as your savings grow, you've got a cushion if, something unexpected comes up, helps you avoid those credit cards.
So it's like a combo of watching those little expenses, checking out refinancing, and building up some savings. But what if someone's already tried all that and they're still dealing with a ton of credit card debt? What else can they do?
Well, if you're in that situation, you might want to look into something called balance transfer credit cards. Those cards offer a 0% introductory APR for a certain amount of time, so you're not getting hit with interest charges during that period.
So it's kind of like a chance to catch your breath and pay down the debt without the interest piling up.
Exactly. If you use it right, it can be a really good strategy. Just make sure to read all the fine print and understand the terms before you go transferring your balance.
Good point. Any other, lifelines out there for people who are really feeling overwhelmed by this debt?
Absolutely. Don't be afraid to reach out to a credit counseling agency, a reputable one. Those agencies can help you come up with a debt management plan, maybe even negotiate with your creditors. They can also help you with budgeting and understanding your finances better. They can really make a difference when you feel lost.
Yeah, it's important to remember you're not alone in this. Tons of people are going through the same thing.
You're right. And speaking of something that could help a lot of people, there's actually been a recent change that might give consumers more power when it comes to credit cards.
No.
The Consumer Financial Protection Bureau, the CFPB, they put in a new rule that gives people more control over their accounts.
Oh, interesting. What does this rule actually do?
Well, the CFPB is like an independent government agency. They're the ones that protect consumers and, the financial world. And this new rule, it's specifically meant to protect people from unfair practices by credit card companies.
Like, what kind of unfair practices are we talking about?
Think like hidden fees, confusing terms, sudden interest rate hikes. This rule is about making those things more transparent. For example, it gives you more say in when your credit limit can be increased so you don't get in over your head. It also gives you more ways to manage your account and avoid extra fees.
So it's kind of like leveling the playing field a little bit.
That's the idea, yeah. Make the system fairer for everyone.
That's great. Okay, so as we wrap up our deep dive into this whole credit card debt situation, what are the key takeaways you want listeners to remember?
Well, first off, be proactive. Don't wait until you're buried in debt to do something about it. Start with that budget we talked about. track your spending, and build up those savings.
Yeah, knowledge is power when it comes to this stuff.
Absolutely. The more you know about managing your money, the better choices you'll make. And remember, asking for help is okay. There are people and resources out there to help. You don't have to go through this alone.
Yeah, that's so important. We covered a lot today, but it's clear that this credit card debt thing, it's way bigger than just personal finances, right? It's about the economy, our society, and the choices we make.
You got it. And those choices, they have a ripple effect.
So let's all try to be, informed, responsible, and proactive with our money.
Let's create a future where everyone can be financially secure.
Yeah, that's a goal worth fighting for.
Thanks for joining us for this deep dive. Hope it was helpful. Until next time, stay curious and keep exploring.